What's going on, everybody? Happy Labor Day. This is Travis Witherspoon from Carter Cow Capital. This is a Labor Day episode of Trade with Travis. Hope everybody's doing very well on this Monday morning. I have 9 to 5. It is 8:23. Obviously, the banks and everything else like that, I believe, are not open. I'm almost certain that the banks and everything else are not all the way open. So it's not necessarily going to be a lot of trading opportunities per se when it comes down to overall explosive movement, but that does not stop us from being able to get a setup to be able to put us in the best place possible to be able to make some type of profit off of that overall move and do everything else like that as we go from there. So, like always, if you would, um, please make sure that when you end up coming in, make sure that you end up saying, "Hey," make sure you end up chatting up and saying everything. Uh, like always, my boys will always hop inside of one of my streams. What's up? I don't know. What does that mean? The xylophone. The xylophone? Get the xylophone. Because I cannot reach it to my house. Where's the xylophone at? Right there over to the toe. Then get up there. But with that being said, let's go ahead and go through the disclaimer. Then after that, let's talk about what I end up having lined up and ready to go if the market ends up playing out the way that I think it will, and we'll kind of go from there. Everything, what's going on? So we're not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. Now, understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, as we go through and be able to take a look at pairs and be able to go through everything else like that. Obviously, we've been using the vortex strategy. We've been doing that for the last 3 months now. It's been very well when it comes down to overall movement. When it comes down to overall movements, if you're interested in being able to learn a little bit more about that, please don't hesitate to be able to send me a message or anything else like that. We'll talk about how to be able to get you into that when it comes down to that trading strategy. Everything, man, everything has been well. Everything has been well. I think since the last time we ended up talking, I ended up having my baby girl. I ended up coming on the 24th, and essentially today is a holiday, obviously here. So just trying to figure out what I'm gonna end up doing with my boys today. What's up? When I'm watching the movie, you need to be quiet. Bro, what movie are you watching? What poem? Maybe I don't see a TV. You see a TV. You gonna say hey to everybody? No. At least say hey. No. No hey. All right. Can you sit right here and be quiet then? No. All right. uh, um. But yeah. So pretty much we end up going through. We'll go through all of that and take a look at some overall pairs. Um. Dax. Dax has been absolutely killing it. We'll talk about Daxes and everything else like that. We end up doing um before I end up getting onto the charts. Hold on, let's see. I'm gonna pull this up real quick. Cause Dax has been absolutely killing it. We end up going. We had 127% when it comes down to this movement. At this vortex trading strategies by itself. Ended up going 44% for his wins, 50% for his 50% for his shorts when it comes down to that. Overall profit factor 1.5, and currently right now, in June we end up doing 32%, in July we end up doing 26%, in August we end up going 35%. Listen, give me overall. The chair back. Hey, don't do that before the pause. All right, everyone, give me one quick second, and then after that we get started. There we go. There we go. What's going on, Peter? Man, everything was fine, man. I end up having, well, obviously my boy's always around. Um, but I really didn't do nothing all that much. Just trying to get everything situated. I've been writing a book for the FRVX tour, for the Vortex course, and um, doing all the videos and everything else like that, so everybody can be able to have those when we end up pushing that out. We're actually in the I'm actually in the phase of being able to do pre-orders and all other stuff, which is always cool. Um, but at the same time, just trying to make sure that I end up pushing out the most quality content and trying to go from there and trying to make sure that everybody can be able to make money and try to find some overall opportunities. So that's what I've been working on. Pretty much my weekend's been tied in when it comes down to that. But hopefully everything's been going well with you and your weekend and your family and everybody else. Same thing with everybody that's actually in the chat, man. Uh, let's make some money together today. Let's see if there's an opportunity. If there's not an opportunity, then I have a trade plan for everybody to be able to take a look at for everything else. So with that being said, let's take a look at the economic calendar. Obviously, we take a look at today. Um, we'll end up seeing that GDP end up coming out for the Swiss franc. Actually, end up being, uh, I guess, what they expected at zero point 0.3. Retail sales from the Eurozone end up coming out, actually end up being negative, more of a negative than what they actually end up expecting. Then after that, there's really nothing when it comes down to the United States aside from the OPEC meeting. We'll see how that kind of affects. We'll try to figure out how that's going to end up affecting what's going to end up happening for its oil. Um, the one thing that I can uh, always be assured of if both of them are not going to end up quitting on doing what they want to be able to do, which is okay. I'm totally fine with that. But yeah, there it is right there. Tuesday, we're going to end up having interest rate decisions when it comes down to the Australian dollar. Wednesday, we're going to end up having Governor Baylor end up speaking about their monetary policy hearings. We're going to end up having a GDP for the Eurozone. And then after that, we're going to end up having an interest rate decision for the Bank of Canada. Um, so Wednesday is going to end up being a very big day. Thursday is going to end up being Thursday. Chairman Powell's going to end up speaking. So remember, anytime that Jerome Powell ends up speaking, the market's going to end up moving. So kind of tread lightly on Thursday, and then after that on Friday, we're going to have an unemployment rate for the Canadian dollar. All right, so there we go. While y'all here, talk about the pairs that y'all want to be able to take a look at. Obviously, I know that y'all all end up having plans and everything else like that. We'll get into all of those. I'm going to go ahead and start off with the big three and kind of take a look at that real quick. But if there's any trading plan that y'all want to be able to take a look at or a pair that y'all are interested in, while I'm going through this real quick, obviously to make it easier for me to be able to take a look at your idea so we can kind of work together when it comes down to this, like always. So here we go. So I don't want to look at USJPY. I want to look at US dollar. Starting off with the US dollar index. United States dollar index from that counter trend line break that we end up talking about in the upper channel has been pushing up. The market was in the buy zone or very close to the buy zone when it ended up happening. The market is clearly bullish when it comes down to movement, which means that the United States dollar um, should be the primary thing that you should be buying when it comes down to that movement. You take a look at it from a daily perspective. We end up having a counter trend line break that ended up happening last week for its overall movement and have the opportunity to being able to make a move from there to continue going up to the upside. Currently, right now, we're getting a little bit overbought, but there's a D extension or the daily D extension ended up getting hit at 13,168. And currently, right now, we're going toward the weekly D extension at 13,500. So I do expect for this market to be able to have a little bit of a retracement first before actually being able to um, continue to finish that push on the weekly. Currently, right now, um, because we have hit a D extension, I do expect that the market will probably end up retracing a little bit more to be able to do that. So even though that the weekly is telling us that the market is bullish, and even though that the daily is telling us that the market is bullish, um, I would hesitate a little bit because the market has completed the D extension, and I'm not necessarily interested in being able to jump in at a high price if the market is going to end up falling down for the next 7 to 11 days. If we end up getting a counter trend line break. So for me, United States dollar index pairs, United States dollar pairs, I'm probably not going to end up making a big push on any of those moves just because of that reason. And kind of going from there. I do want to see what's going to happen on Thursday. and see how the market kind of reacts based off of that as well, though. All right, so there we go. That's the United States dollar index. Let's talk about oil. Take a look at what's been happening in oil. Oil actually ended up falling back to, I'm not going to call it a support because I don't believe that it was like a natural support. You can kind of see that it was somewhat of a pivot level, but I'm not going to call it, I probably won't call it a support. Um, but we ended up talking about how this market was basically creating um, a bearish crown, which means that the market ended up breaking the A of this upward movement that ended up happening right here from a daily position. And now the expectation is that the market is probably going to end up falling before starting to push back up at the latter part of the winter months. So with that being said, we'll see that the market is basically done fell down to 86. I'm going to say 86.30 a couple times and then found support in that overall area. Doesn't necessarily mean that it's going to remain to be that way. But currently, right now, I would say that the market is bearish, but the question is there an opportunity to be able to make a move off of that? From a weekly perspective, we can see that the weekly is in the buy zone, and there's an expectation that we could see a counter trend line to be able to break up to the upside. From a daily perspective, um, we're seeing that the market has shown a little bit of that counter trend line break, or shown a chance that there could be a counter trend line break, but there's no counter trend line break as of yet. So once again, this is not a pair that I will look at being able to get into because there's really no confirmation of a move yet uh, to get in for overall trading as of yet and feel confident. But once again, one of those things to where you have to look and keep it in your mind that this could potentially happen at some point once it ends up going from there. Oil is going to 77. It wouldn't surprise me. It could go all, to be honest, it could go all the way down to 64 if we're being honest, just based off of fibs. Um, but if we take a look at the retracement, going back to the 80-20 rule, because the market is only retraced to the 23.6, you take a look at the 23.6 and the 80-20 rule, that means that when it falls, it will probably end up having a little bit of support at the 127, which is 77. Go figure. There we go. So there it is. So I would look at the market basically falling down and being able to go from there, and hitting 77 before being able to pop up. But yeah, there we go. Makes sense. All right. So okay, good. So that's oil. Oil, I would not make a move off of that yet either. Obviously, you're gonna probably hear me say the same thing about pretty much every pair today, just because it's a holiday. But we're talking about setups that could potentially happen. So when I started talking about the indice pairs, you will start to see where my thought process is going when it comes down to all of these. But we'll kind of go from there. Oil, I mean, gold, very simple, not doing anything with, but I'm glad to see that the market actually ended up popping and kind of showing a little bit of support when the market ended up hitting 1685. Now, I still am not going to end up taking a trade unless the market ends up breaking below 1685 or going above 1872 when it comes down to a movement. So currently, right now, it's still in the no trade area for me. But people that like the trade gold, the market end up hitting support. Maybe one of those situations where you might want to sit up there and buy, but currently, right now, not interested in being able to make a move as of yet when it comes down to that for his overall move. At least not yet. Okay, so there we go with gold. Not going to do anything off of that as of yet. So what does that mean? United States dollar index, we're looking at being able to buy, but the market is not necessarily ready yet because it could be a little bit overbought. Oil, when it comes down to its movement, is at a position to where it could potentially keep on falling down to $77 a barrel, but there's no confirmation of a counter trend line break to the downside yet. So still going to wait on that. And gold, we haven't traded in literally about 4 months just because it's in a larger consolidation block. So we're going to stay away from that. Type in a wire, yes, if that makes sense when it comes down to those pairs. We'll start getting to the indices real quick, unless there's a trading pair that y'all may be interested in being able to talk about, in which we can talk about right before we start talking about the indices, in which obviously that market opens up in an hour. So type in a while, yes, if that makes sense. Type in if you end up having a trading pair that you're interested in being able to talk about. We end up going from there. Okay, gonna get this off the screen. Got good to go. Let's go ahead and start with Dow Jones and kind of go and talk about what's happening towards its overall movement. From a weekly perspective, from a weekly perspective, we end up having that crossover. We end up talking about the market was in the sell zone. It was basically showing a transition trade. From that transition trade, we end up talking about that there was going to end up being 2 to 3 months, um, 2 to 3 months of overall downside movement because you're talking about 7 to 11 candles of overall downside movement that could potentially happen. Now, we go back and we end up taking a look at this long-term counter trend line break or long-term trend line from this potential large scale consolidation that we end up seeing in early June. I'm seeing that the market is actually breaking that to the downside. If this is going to end up happening and it keeps on moving to the downside, then this market could potentially, from a weekly perspective, go all the way down to 26,100 for its overall movement. Now, obviously, I'm not going to end up placing in one trade and holding that trade all the way down to 26,100. I just don't do it that way. That's not my style of trading. For some people, that works out. Me personally, based off of using the vortex strategy, it doesn't make any sense for me to be able to do that because it gives me a lot more opportunities right when I end up seeing the market show up in low volume nodes. So, me personally, I'm not going to wait that long, but we are broken below that trend line, which means that this week is really more set up for being able to test and see if this counter trend line break is going to end up being valid. So you take a look at it from a daily perspective, we can see that we're in a buy zone. We can see that we're below the overall counter trend line break, and it does. And typically, what happens is when the market ends up breaking out, you end up having a retest of this movement. I would not necessarily say, well, it probably wouldn't be out of the realm that the market could do something like this and then start to pop back up and keep on going bullish. Or what could happen is that the market could basically reject off of here, kind of push up and not go past that fractal high. And then after that, start to look at being able to fall down for its overall push to the downside, depending on what's happening with news and interest rates and everything else. Me personally, because I end up looking at the weekly and I said the weekly, there's a better chance that the market could potentially fall. I am personally thinking that the market is going to end up being bearish, but that wouldn't stop me from necessarily looking for a great setup for buys if we end up having it. Now, currently, we don't have that at all. You take a look at it. Let's go back to what we ended up doing for us last week trading. Let me get off of this real quick. We end up having that first movement where the market went in consolidation. We end up taking a sale on this one, I believe, on Monday. Market ended up falling down. We end up taking our profit. Then after that, market went into consolidation again, pushed up back in the same area where we end up getting out at. Went into consolidation again, and then after that, pushed all the way up to 31, basically 31,970. Once that happened, it ended up building the long-term block of a larger consolidation panel. So for me personally, now when I'm looking at these indices, I'm saying now I am not trading in between 31,300 all the way up to 31,900. Now, does that mean that I'm giving away potential profits? Yes, I am giving away potential profits, but in doing that, I'm looking for the best potential trade that could happen once the market ends up breaking. So I have a couple orders. The orders to the downside that I'm looking at is at 31,300. If the market ends up falling from 31,300, my first initial stop loss will end up being at 31,430 with a take profit of 31,15. Okay, so if it does break below 31,300, it will break below this overall area, overall level area where it would break support. 31,300 will end up being in a position where that void will actually end up falling and kind of being able to make a true move. From there, 31,430 will be the stop loss and going all the way down to 31,15 for that movement. Now, the second trade is a little bit more longer term. And the reason why I end up going with a little bit more of a longer term type of trade is because you look at that potential long term consolidation that we end up having right here, that end up happening before. If this market ends up falling, it could fall all the way down to this leg of volume right here at 30,008. I think I had 30,710, but I probably need to adjust that now based off of taking a look at this at 31,830. 31,830 will end up being that next fall of an area where it could. Now, because this is a larger position, and being able to go out there a bigger move, my stop loss will end up being above the overall resistance of this box consolidation that we're looking at. That stop loss will be at 31,470. 31,474 is that stop loss. So that is the pending orders that I actually have placed in right now. So if the market does break consolidation and then after that starts to move, I'll be triggered into both trades. Because today is Monday and we know that the market is going to end up being closed, I'm hoping that it doesn't happen today. The reason why I hope that it doesn't happen today is because I think there's a better chance that there could be a false break compared to being a actual true break when it comes down to this movement. Type in a wire, yes, if that makes sense. But that is the order that I have for us being able to sell. Now, I think some people will probably end up asking, well, why do I not have an order for us being able to buy? The reason why I don't have an order for us being able to buy is because I've defined that this is a true consolidation box, and there goes our resistance, there goes our support. I don't like trading inside of consolidation, so if I miss that buy trade, I just miss it. I'm totally fine with just saying that the market could go up to resistance from there based off of that movement. Okay, but we're in the midst of this is the third day of consolidation. We've seen consolidation kind of run. The last biggest consolidation that we ended up seeing was about 9 days off of Dow Jones. So it could be something potentially like that. All right, there we go. That's US 30. Let's go ahead and talk about NAS 100. NAS 100 is showing the same thing. I'm not going to go 15-minute and everything else. I'm just going to go ahead and just point this out and we kind of play back and kind of go from there. But we take a look at it from a 15-minute perspective. We end up talking about these sales that we end up getting into last week. The first one ended up falling down, ended up hitting us for a full take profit. There was a 1 to 2.6 profit range. But it actually ended up creating a block where the resistance was at 12,450. When it fell down, the support was all the way down at 12,030. Since then, same deal. Market has had its vortex area consolidation, vortex area consolidation. We can see that we naturally built out a block based off of that movement over the course of the last 4 days, which means that trading inside of this area now I am not personally doing. Aside from one trade, I'm going to end up gambling going a little bit, not necessarily gambling, but I see a large consolidation hold or large low volume node area that's right here, and I want to take advantage of it if it does pop up to the upside. So I have 3 orders that are placed in this area. Let's talk about the one that could potentially happen if it pops up to the upside first. Um, this market does break above 12,150. Um, I have it to where I would look at being able to get out at 12,275. So you're talking about a 125 point move that's inside of consolidation. That's the only time that I'm really kind of doing this. This is a 1% trade. The reason why I'm doing this is because I've seen that we end up having a vortex area right there and a vortex area right there. So if it does push, it's going to push fast. It'll probably end up getting to the top of this or basically getting back to this previous past resistance turn future support or past support turn future resistance and kind of push up inside of that area. But that is the first trade. That is a little bit more of a dangerous trade. So it's only a 1% trade when it comes down to that for me. Now, if it does break to the downside, I have an order at 12,30 with a stop loss of 12,115 and a take profit of 11,850 if it ends up falling. Now, if this market does push up to the upside, then we'll look at the resistance levels that will end up being at 12,450 with a stop loss of 12,360 and a take profit of 12,875. So there goes my orders when it comes down to those positions. When it comes down to that, I've already done placed in all these pending orders. I did all this work yesterday. Everybody give me a second. Okay. All right. So That is Nas 100. Any questions about Nas 100? Any questions about Nas 100 at this particular point? Okay. All right, here we go. DAX. Now, remember, DAX is not a U.S. based pair; it's a German based pair, or German based indices and everything else like that. So we don't necessarily have to have. If we want to be able to trade, the best pair to probably end up trading would probably end up being German 40. But if you look at it, we're seeing the same deal. We end up seeing that the market had a resistance at 13,040. We end up having a support at 12,613. The market is breaking out of this overall blocks area to be able to push up to the upside for its consolidation. But the problem is that it's going back into a previous consolidation area that end up happening right here. So for me, that makes it kind of a hard trade to be able to truly just consider for being able to take for the long term trade, or just for the long term trade. Now, I will say this. There's a counter trend line break that's already done moved. It's outside of this consolidation area. If this market was to go up, then it could go all the way up to 12,825 without much of hesitation, just based off of this low volume node right here. And we are in the midst of seeing the same actually move. So if you are interested in being able to take a trade, that would be the trade that I would look at being able to take this morning as a general scout for us being able to do that. The 15 minutes in the buy zone, which means that you probably got an hour worth of overall movement that's in your favor. We take a look at it from a daily perspective. We see that the daily's in the sell zone. I don't think that necessarily matters because the market was in consolidation. But that could be a potential move to the upside that people could be able to take advantage of. Me personally, I don't know if I would. I still don't think I would take it. I personally don't think that I would take it because I'm starting to see that we have this. That we're starting to see a little bit more of a consolidation area, and if this market does run back up, it's running back into a consolidation block. I would rather take the trades on the outside. That's what's the only area. What's the only trade that I did not place in any type of pending orders in. At least not yet. Reason being is because that um, Reason being is because that if the market breaks to the upside, we have a very small gap for its overall movement that could happen. And if the market falls, then I think that we have a even bigger drop than any other market that we could potentially end up looking at, where the market could fall all the way down to um, what was it, 10,380. So I have one pending order that is set up at the bottom of that previous consolidation that ended up happening in early July, where the order will end up being at 12,175, going all the way down to 10,380 with a stop loss of 12,550.
Can I watch a tornado? Why not? Can I watch a tornado, Dad?
Go, 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 go. Um, we end up taking a look at that movement to the downside. So currently right now, I have not placed in a pending order on this one. I will come back to this one. This will probably be the last one that we'll take a look at. Um, I'm not saying that the market could not keep on pushing up today. I think that it possibly could. I think that there'll probably not necessarily be that much fight when it comes down to that movement. We're leaving low volume nodes. I don't know. I'm giving myself a reason to be able to take a trade. I go a 1% trade. I go a 1% trade. Let's see what happens. This just for the sake of content, I guess. Let's call that what it is. Um, okay, so for the sake, once again, for the sake of content, I'm probably going to take this off of a demo account. I'm probably not going to do this on a live account. Um, Market has already done broken out of this area. We take a market trade from here to here. We're getting out 12,826. Stop loss will end up being below the swing low of this overall movement, which means that it'll end up being tight. We'll be risking 56 points to go out to 83. I don't like the risk reward. Okay. Um, there's a counter trend line break. See a U-turn. See a low volume node. We're in a consolidation, but it's not a high volume node. All right, I'm going to take it. I'm going to take it, and I'm not going to hesitate. If I hesitate anymore, then the risk reward factor is going to be done. All right, I'm only risking 1% of the account. This will be an instant trade right now that I'm going to end up taking stop loss 12,006 stop loss 12,685. Take profit. Um, yeah, I prefer not to trade this either, but like I said, we have a bigger there's a bigger area that could go all the way up to 12,876. But once again, today is slow in my mind. I think today is really going to end up being slow. I'm going to go 12,847. What I'm going to do is I'm going to make my trail stop 35 points, which means that if it goes up 35 points, then it will basically put me at break even when it comes down to this. I'm doing this on a demo account. I'm not going to do this on a live account. Um, Matter of fact, I'm not even going to go 1%. I'm going to go 0.05%. So I'm going to go a half percent on the straight, um, and kind of go from there. I'm doing this because I want to see if this low volume node kind of pushes up. Once breakout, it will go to 13,566. I believe that. I believe that. I would be practicing bad habits if I take this trade, even if it goes well. I'm not going to take this trade. I'm not going to take that trade. There's no reason to practice bad habits. No reason to practice bad habits. All right, let's move on. I've done over 30% on this account for the last 3 months by not doing bad habits. I'm not going to do it now. Yeah, it doesn't make any sense to be able to do that. All right, here we go. XPX 500. XPX 500. Once again, all of them are making the same. All of them making the same movement. Um, Consolidation block that end up starting off on the 30th, end up having a resistance at 4,013. The market ended up falling down to support. Now, here's the thing that's a little bit different on this one. I've seen it on US 30 as well. When the market ended up having this consolidation, it failed, but it kind of double bottomed down here at 39,010. So the question would be, where's the actual we look at the support, the natural support is at 3905, right? The entry point that I have on here is 3905, where I would end up getting in. My stop loss will end up being at 3932. Take profit for the sales will end up being at 3850. Um, but as the market ends up pushing up to the upside, if it does break, um, we have 4,015. 4,015, that's the entry. Stop loss will end up being just below the overall high volume peak of this one, which will end up being at 39.86, and take profit will end up being at 4,115 as a position for that. Now, keep this in mind. Out of all of these pairs, I know I talk about high volatility all the time. XPX 500 is not a high volatility trade. It's not going to move fast, right? It's a forex pair when it comes down to how it moves. I kind of equate the XPX 500 to a Euro United States dollar, because the Euro and United States dollar, when it's moving, when it's on a roll, it will end up moving very fast. When it's not on a roll, it's going to end up bogging down and going very slow. That is the equivalent of what I'm seeing with XPX 500. For some people that don't like trading this, I can understand why, just because of the volatility and everything else like that. But a setup is a setup. It's a setup. So if there's going to end up being a area to where you can be able to make money, even though it may take a little bit longer of a time to be able to do it, obviously we end up having movements kind of like what happened right here when you end up having one day of overall movement towards the downside. Remember, on Thursday, we're going to end up having Jerome Powell end up speaking about what's happening for the movement. The last time that he ended up speaking, this movement happened right here. So on Thursday, when we end up seeing that Jerome Powell's going to end up speaking again, There may end up being some type of breakout between one of these two trades that we end up having. By having both, we don't care about what's going to end up having. We just take the trade and just move forward from there. All right, and just kind of go from there to see how everything kind of plays out. All right, but trading cryptos life. What's going on? If you have a trading pair that you want to talk about, go ahead and place it inside of the chat box. We'll go ahead and talk about it, and kind of move forward from there. But let's go over a quick review, because once again, I am not in a position. Can I take a look at Euro JPY? Absolutely. Let's take a look at it. Just a quick review. Euro US 30, not taking a trade yet, looking for the market to be able to sell. Want to get into an entry when the market ends up breaking below 31,300. Have two take profit levels at 31.15, and then after that, 30,720. When it comes down to this market actually moving, stop loss, you can either place it above the overall resistance at 31,480, or place it above the high volume node, which will end up being at 31,450 for that movement. Nas 100 is inside of a consolidation block as well. I got a sell trade that is set up at 12,000. A sell trade is at 12,020. Take profit will end up being at 11,850. Stop loss will end up being at 12,113 for its overall movement. We end up having a quick buy order that's inside of the overall block. If that does happen, that will end up being at okay. What was I looking at? Oh yeah, 12,150. Could go all the way up to 12,280 for that movement. Stop loss will end up being 12,880. I mean 12,088 for the stop loss. If it breaks above this overall block and goes inside of this high volume node, obviously look at this major peak of low volume area that we would be going after. If that does happen, obviously that'll kind of go back to what ended up happening when the market ended up falling down the first time. So let's see, this is moving to be at 12,460 going after. I'm saying that we're going after the larger block because this is giving us a greater value area. You can say 12,896 or get out at 12,840, depending on what you want to be able to do for Nas 100, for that movement. But we are taking advantage of that low volume node that could potentially end up happening from there. DAX, I decided not to be able to take the trade, but my automation system said not so fast, and it placed me in. It literally just placed me in at 9 o'clock. So I'm going to let my automation system take the trade and kind of go from there and see what happens. Currently, right now, that's actually up at this particular point. But I would not look at being able to take a trade until the market actually ends up breaking past these outside levels. I would honestly almost probably only take a look at this trade at 12,987 before it kind of pushes up. I have a question, or maybe say your opinion about Euro United States dollar. I want to take a long position. Would be nice. Thanks for your content. I'll take a look at it in a second. So Euro Yen, Euro United States dollar. We'll take a look at Euro Yen first because it ended up coming out first, and then after that we'll take a look at Euro United States dollar from there. XBX 500. Just a quick review before I get off of the indices. Market ended up falling down below 30 before 39.05. I have a sell trade pending that's ready to go. That's going out to 38.50 as a take profit. The stop loss will end up being at 39.31 for the buy trade. It ended up being at 4,015 with a stop loss at 39.85 and a take profit of 4,110. Okay, so here we go. I think head and shoulder completed. We'll start the C leg. What pair are you talking about? We're talking about Euro Yen. We're talking about Euro Yen. Everything we're talking about Euro Yen. Okay, here we go. So Euro Yen. I'm gonna do a quick breakdown on all of this, and then after that we'll kind of go from there. I'm gonna hide these trend line with breaks. I don't need that yet. Now keep in mind, because the eurozone has been so weak, any buying opportunity with the eurozone is always a good one. Okay, because that means that you're getting so much of. I think you're getting so much value just because you're getting in when people don't want to get in. So keep that in mind. That's with the Euro United States dollar, and that's with Euro Yen for its overall movements. Um, and kind of go from there. So the last time we took a look at this, matter of fact, y'all didn't take a look at that with me. Let's clear this screen and we'll kind of go from here. Euro Yen, I'm going to end up considering to have a bullish track for its overall movement. This is the fractal low that I'll work off of right here. Currently, right now, the market is on its third leg. The market is retraced all the way down to the 5-0. From a weekly perspective, there's a counter trend line break that is about to be broken. I'm not going to say it's truly broken yet. Um, but it's moving to the upside. The one thing that I like about it is that the weekly is in the buy zone. Once again, we talk about when the weekly is in the buy zone, then that means that you have 2 to 3 months of overall movement to the upside. Now, y'all getting into this early makes it a very simple trade to be able to get in and kind of ride out for a long time. This market has a D extension at 156.51 for its a overall long term perspective. Currently, right now, that will be about 1,700 points of movement to the upside. But really, if you take a look at it, let's say we were to enter in this trade right now and don't move anything, the risk will end up being about 623 points going out to 1,700, easily a 1 to 3 risk reward factor when it comes down to that movement. So obviously, movement is more to the upside for us. That take a look at this from a daily perspective. The daily is showing signs of a channel, and this kind of reminds me of what ended up happening with the pandemic, in the pandemic with the euro, with euro United States dollar, before it ended up making its big pop out when the United States dollar started to get weak. Um, what happened with that one was that the market was in a channel for a very long time, and when it broke out of that channel, that's when the United States dollar started to get weak overall between all of the pairs. By the end of March, I believe when that actually ended up happening, when the United States dollar got very weak overall, and the eurozone got very strong. So currently, right now, this is what we're looking at for its overall channel. Um, a question is, would I look at being able to take a position right now? Roseanne, are you in? Oh, say, are you in one? Are you in a position, or are you just waiting for it to move? Are you waiting for it to get into a position? I always have to ask because it kind of makes it a little bit of a better situation to be able to answer a question for you. Okay. So if you're waiting at this particular point, the market is in the sell zone. Because the market is in the sell zone, we probably might end up seeing a little bit of a retracement. If the eurozone is truly strong, let's say if the eurozone is truly strong and is truly ready to be able to make a move, what you'll probably end up seeing by the end of this week or sometime soon, that the market will end up finding support at this little midway point. If the market ends up finding support at this midway point and use that as a springboard, what you probably might end up seeing is something like this. Market falls down, then after that pops, and then makes that movement from there. Currently, right now, I sit on my hands, but I'm kind of getting interested in this position to be able to see what happens. But because it is in that downward trend, I would kind of see what's going on with that. Hello, which volume profile are you using as visible range? How would you determine to set the range on the most recent trend? Good question. So let's kind of go back into what we're looking at right now with Euro Yen. Um, but currently, everything right now, I wouldn't do anything. I will wait. I will wait as well. We're at the top of a descending channel, so I have to break out of that channel to the upside before even thinking about taking a position. Yeah, I wouldn't look at taking a position until that actually ends up happening. Let's see. Um, so those weekly. So let's do this again. Let's take a look at this one time. I'm going to answer the question about the volume profile in one brief second. I just want to make sure that both of these charts kind of match up. I use Smart Trader when it comes down to fields because they have one thing the trading view just doesn't have, which is called an auto field. The auto field was a game changer to me when I started trading Fibonacci's, just because it automatically did all the work for me. So I still kind of go back to that time and time again when it comes down to being able to see what's happening with field, because sometimes doing this can be somewhat aggravating. Um, all right, so from a weekly field is already done, completed the extension. Currently, right now, we're looking at this movement right here, A, B, C, D, here to here. There goes that retracement to the 5-0, and there goes the push up. We say at 153, I got 156 right here. Okay, so thanks. I'll put a sell limit of 140. 65, stop loss 143. Okay, cool. So the volume profile that I use on the right hand side is the volume profile visible range. The reason why I use volume profile visible range is because to me it gives me more of an opportunity to be able to see where the um, actually where the low volume nodes are. I pay attention to high volume nodes in areas to where I don't want to trade. I look at the low volume nodes in areas that I want to be able to exploit. Rob, to be able to answer that question. That's the whole purpose of the vortex strategy anyway. And being able to use that to your advantage. You would like to be able to learn a little bit more about that. Obviously, send me a message. I actually am doing a live stream about that a little bit later on today, because we have a built out strategy that I've been basically showing everybody for forward testing on how to be able to capitalize off that overall movement. But from a simple standpoint, that is what it's for. Now, typically when you look at volume profile, I don't look at it from a day and weekly standpoint. I look at it from a 15-minute and an hour standpoint, because I think it gives you more information to be able to work off of. And it makes it a little bit clearer when it comes down to that movement. Now, going back to what I ended up saying with the channel that we was looking at. Here goes that channel once again. Question is, looking at this one, did it truly break? Because that looks like it's breaking to the upside right there. This was that downside channel that I was looking at to the downside right here. Market is still in the sell zone. Still taking a look at it from there. I don't know. I'll take a look at that. If we're looking at it like that, that's a breakout. There goes a retest. That could be a potential push up. Let's go to wave 5 completed. Okay. Let's look at it from a bottom profile perspective then. All right, tell me if everybody sees this. How about note? This was the high volume node consolidation that was inside of that block. Kind of fell all the way down to about right there. When the market ended up popping up, we end up having Rob, to answer your question. Here's the answer right here. So looking at that overall pop force, that overall movement, we can see that the high volume node end up bringing out a large consolidation. Once you end up having that large consolidation, now what you want to be able to do is take a look at the low volume nodes to be able to see what you can be able to take advantage of. That low volume node was from this breakout area to right there. when the market ends up having a little bit of hesitation for that movement. Now, it's not necessarily as large as what the high volume node would actually, what the previous high volume node was, or the previous consolidation ended up happening, but that was the first little breakout. You keep on zooming out and giving yourself more information, you will notice that all of this is pretty much a high volume node. So it's really not a great area to be able to truly trade. So you're going to have to scout and try to get as much as you possibly can. That's why this circle position or that ellipse was the only great position to be able to make a move out of it from that position. Now, we take a look at what's happening now. Seeing another high volume node. Okay. Wait for A and B, waiting for C. That's my opinion. So you believe that? So you believe that there's going to end up being a push to the upside, and it's going to continue to go. That's what you're thinking. Everything. Because you're saying A and B is completed. You're saying that the market. You're saying that the market is waiting for another retracement, and once that retracement hits, then it's going to move down to another extension, or that'll be your D phase in that case. Let's see. Here, market broke out, but it fell back in. Euro yen, me personally, once again, I will still wait. Check up field. Check up field. Let's see. Yeah, that's what I ended up saying. Yeah, that's exactly what I ended up saying with the first nation movement when I was looking at it off the smart trader chart. So A, B, there goes your C. The extension is expected to be up there at 145.64. Currently, right now, I'm still waiting. I will still wait. There's no reason to sit up and go through this because it's still in consolidation. So I'll still wait. Let's go ahead and get to the Euro United States dollar real quick. So Euro United States dollar from a weekly perspective, obviously, is moving towards the downside. We're still seeing, once again, this channel that's moving to the downside where the extension from a weekly perspective is expected to be hit at 89, 89.92. Daily take profit from a downside movement will end up being 96.47. Now, the question was, would you take a look at it? Hey, what's your thoughts on gold? To be honest, I wouldn't do anything with it. I haven't traded gold in like the last. I haven't traded gold in like the last 4 months. It has to break below 1685 to even consider a sale. It has to break above 1872 to even consider a buy. We ended up talking about that one earlier. Let's see. Trading crypto's life would be nice to take a long position on Euro United States dollar. All right, now trading crypto's life. Let me tell you why I would not look at even considering taking a buy. The reason why I wouldn't consider taking a buy is because the market is in a R3 position, meaning that from a daily field perspective, the D extension has not been completed right here. And until this market is completed to the downside, you're going to end up seeing way more people. No problem. If you have any other questions, go ahead and place them inside of the chat box. Um, if we're taking a look at it with Euro United States dollar, we're taking a look at this. There's a better chance of more sellers to keep on driving this price down until the market ends up hitting the D extension compared to the market actually pushing up to the upside. So with that being said, I would not consider any sell trade until the D extension is actually completed and there's a true counter trend line break to the upside for us being able to make a movement. So that is my answer when it comes down to what's happening with the Euro United States dollar. There is a counter trend line break to the downside currently right now from a weekly perspective. So let's go ahead and take a look at it from a daily. We end up having consolidation. We had a little bit of a breakout. We're seeing a consolidation happen again, and it's starting to look like that we may end up having another breakout to the downside um, from this little bit of consolidation currently. But if you notice, okay, then I'll close my position. Look, I'll take some profits. Okay, profits is always good. Don't let me stop you from making money. uh, yeah, so what's happening now, it's done happen over the course of the last 10 days, is that the market has found a resistance at 1.0038 and a support at, let's say, 99.15, just for the sake of being able to say. As long as this market keeps on staying inside of this consolidation, then I would not personally look at being able to take any position for its overall movement. I guarantee you, when I look at this from a volume profile perspective, we might end up being inside of a high volume node. Uh, yep, there it is. Can't make it up. There it is. High volume node consolidation. The number one rule when it comes down to when it comes down to using volume profile and finding high volume nodes is that I do not trade inside of consolidation. That is the number one rule right there. You want to save yourself 40% of your money. There it is right there. You don't trade inside of that area. You allow everybody else to be able to trade inside of that area and be able to make the mistakes of being able to say, hey, if I'm trading inside of this middle area, I have a 33% chance of being able to win. If I trade the resistance or support, I got a 47% chance of being able to win. For us being able to do that. That's if you're trading support and resistance in the natural way that you typically would do it. However, if you end up waiting for the market to be able to break the high volume node, then you can be able to know exactly where the market is going to potentially go to the upside and to the downside just by using history to your advantage. Well, in this case, the market ends up breaking to the upside. You can get in at 1.0045 after everybody's done fought, take it all the way up to 1.0142. All right. Yep. Matter of fact, you can be even safer than that. Take it to 1.0127 and have a tight stop loss on the inside just below the medium portion of that high volume node, and have a 1 to 2.1 risk reward ratio where you won't have to fight with everybody when the market breaks out. Now, if it falls, that's an even better trade to be able to take a look at, because if you don't have history like that to be able to work off of, you have to go really back to the 2 hour, almost even the weekly, to be able to take a look at it. Let's see, let's go back to the weekly and see what happens. You go back to the weekly, the last time that this market has failed down here was all the way back in 2002, where the support was at 96.50. So if it does fall, it could keep on going all the way down to 96.50 without really having that much of a hesitation. Well, if you take a look at that, we take a look at what we ended up talking about before. We say that 96.50 would be basically the 96.50. 96.50 would be right below the 127 if that happens. So once again, in my personal opinion, there's a better trade and a easier trade to be able to take to the downside overall when it comes down to this movement. But currently, right now, as the market is constructed inside of this high volume node and all of that consolidation, I would not do anything with it. I would wait until the market actually ends up breaking to the downside for that movement. Type in a wire, yes, if that makes sense. You want to trade? All of us, I think everybody in here wants to trade smarter, not harder. Don't want to sit up there and fight with everybody. The most agonizing thing is to be able to get into a good trade and have to stay into that trade for day after day after day just because the market is not ready to go. Right. So essentially, trade it when the market is ready to go. And then after that, you won't have to have that headache of being able to stay in the trade. And then after that, having to wait for so long, and then after that, have to pay swap costs for everything else that happens with it and all of the good old jazz. 650. Now, because this move is all the way down here, if this market does to be able to fall, does decide to be able to fall, how many pips would that be? 262. We're going 262, and I see that we have this consolidation that's kind of building up. I will place my stop loss. You could possibly even place your stop loss above the actual high and to be safe with it. But I would probably go above the halfway point. So if it breaks 96, if it breaks to the downside, 96.64 would be the stop loss. I would go after, take profit at 96.50 if it does fall down to the downside. That would be the order that I will place in. That would be the order that I will wait for, and if it breaks, then it goes. If it breaks to the upside, then I have another trade for it. If it breaks outside of this consolidation, then starts to push back inside of the consolidation, then that's an early exit of being able to say, hey, I need to get out, right? I just need to get out because it's not there. But if it does break and it continues to keep on moving down, then you have a big trade that you could be able to work off of. All right. So once again, everyone, sorry because I don't have an active trade for you, but I got a lot of pending orders for you that we could be able to take a look at. Obviously, we went through all of those earlier today. I'm actually going to end up stopping it here. This is the first time that we done went truly over our hour. Um, had a little bit of free time, had a little bit of fun. Obviously, had more people that end up popping in. Thanks for the people that end up. Thanks for the people that end up following Fatty. I'm gonna, but John, hopefully I don't say that wrong. Yusef, Hush Cloud, Peter, like always, it's always good to be able to have you in. BMH, what's going on? Adam, thanks for the follow. Everybody else that ends up popping in, I truly do thank y'all for being able to do that. Now, if you would like to be able to learn a little bit more about what I end up doing for the Vortex strategy and everything else, as I end up saying in the beginning, I hold classes pretty much every evening when it comes down to personal training and everything else like that. The one class that I'm building out and I'm starting to get people to jump into is the Vortex course. We have an automation system that's being built on this, being built for this right now as we speak, meaning that it will automatically use the volume profile and do everything else like that to be able to trade those low volume node voids without you having to be able to do that. Place in the pending orders the exact way that we end up doing inside of the classroom. So keep your ears out on that. That's going to end up being out before October. I'm trying to get it out before this. We're still working on the beta phase of it, but want to make sure I end up having it out before the October push because just like if you've been around trading for a while, you know from October to January, it's the biggest push that you can end up having from some type of trending type of movement. So I'll rather have it ready for everybody to be able to get prepared for that than anything else. So if you're interested in being able to learn a little bit more, don't hesitate to hit me in the chat box and be able to go from there and just type in trading webinar or say, hey, FRPX. I'm I'm sorry, VRTX. Jeez, VRTX when it comes down to the actual trading strategy and kind of go from there. But like always, make sure that you end up planning your trade, trade your plan. I see each and every one of y'all for tonight's session at 2100. I don't think that there will be a position placed in, but we'll see. Obviously, the 930 bill is about to hit, so we end up going from there. Everyone, take it easy.